All right, so let's jump into this Motley Fool article talking about, well, Warren Buffett's stock picks.
For February 2025.
Right, February 2025. And, two picks kind of jumped out at us. Chevron and Domino's Pizza.
I know, right? It's like, well, one of these is definitely a classic Buffett.
Sure.
But then Domino's, like, come on, who would have thought?
It's an interesting combo. So Berkshire Hathaway, of course, Buffett's company, they own about 6.6% of Chevron.
Yeah, a big chunk of change there.
So for someone like me who's not an oil expert, can you explain what it is that Chevron actually does?
So they're kind of like a one-stop shop for all things oil, from exploring to finding it, drilling it out of the ground. That's what they call upstream. And then they refine it into the gas that we put in our cars, things like that.
They do it all?
Yeah, downstream stuff. And get this, they're planning to buy Hess Corp for like $53 billion.
Wow.
Big move to, boost that production even more.
So this seems like a really classic Buffett move, right?
Oh, yeah, for sure. I mean, he loves American businesses. And, this acquisition just makes Chevron even bigger in the U.S. oil game. Makes sense, right? Especially now with all the crazy stuff happening globally.
Yeah, it seems like having a strong domestic energy source makes a lot of sense.
Absolutely. And plus, Chevron pays a pretty sweet dividend, over 4% right now.
Really? So it's just for owning the stock?
Exactly. You get paid.
Awesome.
Yeah.
Now, the article mentions they have a low net debt ratio, which, what does that even mean?
Basically, it means they're not drowning in debt. Gives them some wiggle room to make big moves like this Hess deal.
So they're in good financial shape.
Yeah, for sure. Especially for such a, up and down industry like energy. They can weather the storm.
So they're talking about some pretty impressive growth projections, right? I mean, free cash flow up 10% annually.
Yeah.
12% return on common equity by 2027. Share buyback program, billions of dollars. Plus, they've been upping their dividend every year for 35 years straight.
Yeah, that's a long time.
Oh, wow.
It shows they're really committed to, giving back to the investors.
So for our listeners, Chevron seems like a stable investment.
For sure.
In a vital industry. Definitely a classic Buffett pick, wouldn't you say?
Oh, yeah, totally. But now let's talk about the other pick, Domino's Pizza.
I know.
This one's a little less, obvious.
Yeah. 0.2% of Berkshire Hathaway's portfolio.
Exactly.
And it's brand new. The article says the stock hasn't been doing great lately.
Yeah, definitely some headwinds. You've got those labor issues, tough competition, hard to raise prices with inflation.
Right.
And they haven't done so hot in some places overseas, like Asia and Europe.
But even with those challenges, Buffett sees something, right? What is it?
Well, one thing is that app.
The Domino's app.
Yeah. Millions of people are using it every month.
Wow.
It's way ahead of the competition, in terms of getting people engaged.
So it's like they took this old school business, pizza delivery.
Right.
And totally modernized it with this app.
Yeah. And plus, they're investing in new stores.
Okay.
And buying back their own stock. They seem pretty confident about the future.
So maybe this is what Buffett means when he says, buy a wonderful company at a fair price.
Maybe. Domino's is currently trading at 26 times its trailing earnings.
Hold on. I don't even know what that means.
It's just a way to look at whether a stock is, overpriced or a good deal.
Okay.
A lower number can mean it's a good deal. But you got to factor in the whole picture, how much the company might grow, what's happening in the market overall.
Okay, so it's not just about the numbers.
No.
It's about the big picture.
Big picture.
But here's the thing. Even with those challenges, Domino's has one thing going for it. People love pizza.
You're right.
Especially when times are tough.
Yeah. It's like the classic comfort food.
You're right. Pizza is recession-proof.
Pretty much.
And that fits right into what Buffett likes. Businesses that do well even when things are bad. So maybe he's betting that Domino's can figure things out.
Yeah.
Use their strengths, like that app, to grow in the long run.
Makes sense.
So for our listeners, Domino's could be a good bet for long-term growth.
Yeah, if it all works out.
But it's definitely riskier than Chevron.
Right, but that's kind of what makes it interesting. It shows how Buffett might be, shifting his strategy as the market changes.
It's like he's not ditching his old ways, but he's adapting.
Exactly.
So two very different companies, but they both tell us something about what Buffett's thinking and what's happening in the market.
For sure. And we've only just scratched the surface here.
All right, let's take a quick break. When we come back, we'll keep digging into how these picks connect to bigger trends and what we can learn from Buffett's approach. All right, so we're back, and we've been talking about Buffett's picks. Chevron, the oil giant, and Domino's, the pizza place. But now I kind of want to connect this to, like, what's happening in the market overall.
Yeah. Yeah, for sure. I think what's really interesting here is how these two companies, they seem so different, right?
Totally.
But they might actually be pointing to some bigger trends that Buffett's like picking up on.
So let's start with Chevron.
Mm-hmm.
We were talking about how they're focused on U.S. oil.
Right.
Do you think this means Buffett's thinking about, like, energy independence is a big theme?
It could be, yeah. I mean, things are pretty unpredictable globally right now, and having our own energy,
Right.
Here in the U.S. could be a smart move.
It's like a safety net.
Exactly. And it's not just about having enough oil, it's about the price, too. If something crazy happens overseas,
Right.
oil prices could go through the roof. But if you've got a company producing oil here,
Yeah.
you're kind of protected from that, right?
So Chevron could be a way for investors to, like, add some stability to their portfolio.
Mm-hmm, for sure. Especially for folks who are looking for those long-term, steady investments. But of course, always got to do your own research. Every investment has its risks.
Of course. Of course. Okay, so let's talk Domino's. What trends do you think this pick is reflecting?
This one seems to be all about technology and how people are, changing how they buy stuff.
Right.
I mean, look at that Domino's app. It's a perfect example of how a regular business
Yeah.
can totally transform with technology.
It's like they took pizza delivery and brought it into the 21st century.
Exactly. And Buffett, he sees that, right? He gets it. It's not just about investing in tech companies themselves.
Mm-hmm.
It's about finding companies that are using tech to, change the game.
And Domino's is all about convenience, too.
Oh, for sure.
People are busier than ever, and they'll pay for something that makes life easier.
Absolutely.
Domino's makes it super easy to order.
Yeah.
And they deliver everywhere.
Exactly. So maybe for investors, Domino's is like a bet on the whole digital economy thing and how that's changing how we all shop and eat and everything.
It's definitely a growth play. But they have those challenges we talked about. Do you think they can overcome them and, actually grow like Buffett's betting on?
That's the million-dollar question, right? And it makes me wonder about Buffett himself. Is he changing his style? Or are these picks just like new versions of his old trick?
It's like he's combining his classic approach with, like, recognizing that the market's changing.
Yeah.
He's not ditching what works, but he's adapting.
That's a really smart point. I think it shows that even, the best investors, they're always learning and evolving. The market never stands still, so you can't either.
Right.
You got to keep up.
So what's the big takeaway for our listeners?
I think the big thing is that there's no, one perfect way to invest. What works for Buffett might not work for everyone. You got to do your own research, figure out how much risk you're comfortable with, and then find companies that match your goals.
Right. And don't be afraid to think differently.
Yeah.
Look for opportunities that other people might miss. That's what Buffett does so well.
Yeah. Exactly. And that brings us back to Chevron and Domino's, two totally different companies.
Right.
But they both show how Buffett's thinking and how he's looking at the market right now.
This deep dive has been really interesting. We've looked at Buffett's picks, the trends they might be connected to, and even picked up some investing tips along the way.
Yeah, it's been fun.
But we've only scratched the surface. There's always more to learn about Buffett and the whole investing world.
For sure.
All right, welcome back to the last part of our deep dive.
Yeah.
We've been talking all about Warren Buffett's stock picks, Chevron and Domino's Pizza, and what they might tell us about, how he's thinking and what's happening in the market overall.
It's been a pretty interesting journey, right?
Yeah.
From oil all the way to pizza. I mean, we've learned a lot about how the Oracle of Omaha, makes his moves.
Totally. We've talked about everything from energy independence and technology to the importance of those dividends, and even how, pizza's like the ultimate comfort food.
Exactly.
And throughout all of this, we've seen how Buffett sticks to his, core investing philosophy.
Right.
Finding value, thinking long-term, really understanding how different industries work. It's like we've been on this treasure hunt.
Yeah.
Trying to figure out the secrets of one of the most successful investors ever.
Absolutely.
But with any good treasure hunt, there's always more to discover.
Right.
And we want to leave you with a question to think about, something to keep that, treasure hunting spirit alive.
I like that, yeah.
So what's the question?
Okay, imagine you're sitting down with Warren Buffett himself, right?
Okay.
You've got 5 minutes to ask him anything you want about these picks, the market, his whole investing strategy.
Oh, wow.
What would you ask?
That's a great question. It really makes you think about, what's the most important thing to understand about how Buffett invests?
Yeah, exactly.
Would you ask about Chevron and Domino's specifically? Or would you try to get a sense of, like, how he sees the world?
Yeah.
How he sees the future of investing?
Big picture stuff.
If I had those 5 minutes with Buffett,
Yeah.
I think I'd ask him how he balances, like, wanting stability and growth with wanting to, take advantage of new ideas and things that are disrupting the market.
Oh, that's a good one.
He's clearly great at finding value in established companies like Chevron, but he's also, willing to invest in companies like Domino's that are using technology to shake things up.
Yeah, he's not afraid of change.
Exactly.
That's a fantastic question. I think it really gets at what makes Buffett so interesting, He's not afraid to adapt, to question what he thinks, to be open to new things.
Right.
But he also stays true to his principles.
He's like always thinking a few steps ahead.
He's playing chess while everyone else is playing checkers.
Exactly.
And that's a lesson for all of us, right? Whether we're like investing pros or just starting out, the world's always changing and we got to keep up.
Yeah, for sure.
We have to change how we learn, how we understand things, even how we invest.
This deep dive has really given us a lot to think about. Yeah, it has.
Hopefully it's made you curious, challenged some of your ideas about investing, and maybe even inspired you to do some more research on your own.
Absolutely.
Remember, knowledge is power. But you got to use it, right?
You got to use it.
So go out there, explore, keep asking questions. Who knows, maybe you'll find the next big investment opportunity.
Yeah, just like Buffett.
Well, that's it for this deep dive. Thanks for joining us.
Yeah, thanks for listening.